What if I told you? Banks make more money when you struggle financially. Sounds insane, right? But it's true, and it's not by accident. It's by design. Think about it. Every system they create, loans, credit cards, even your own checking account, isn't just about managing money. It's about controlling it, controlling you. These financial institutions have perfected the art of psychological manipulation to keep you in debt, spending more, saving less, and forever stuck in their system. And the worst part? Most people have no idea it's happening. But today, that changes. I'm exposing 7 sneaky money tricks that banks don't want you to know about. These are the tactics they use to quietly drain your money and make sure you never break free. Once you see these traps, you'll never fall for them again. The first trap is called the minimum payment scam. Have you ever looked at your credit card bill and thought, oh, the minimum payment is only $50? That's not too bad. Well, that's exactly what the bank wants you to think. Because here's the truth. Minimum payments aren't there to help you. They're designed to keep you in debt for as long as possible. Let's say you have a $5,000 balance on your credit card. If you only pay the minimum each month, do you know how long it'll take to pay off? Over 10 years. And by the time you're done, you won't have just paid back 5 grand. You'll have handed the bank double, even triple that amount in interest. That's the trick. The payments seem small and manageable, but the interest keeps stacking up. So how do you beat this? Always pay more than the minimum. Even an extra $50 or $100 per month can cut your debt time in half and save you thousands in interest. Because the longer you stay in debt, the richer the bank gets. And trust me, they're counting on it. The second trick is called the free credit score trap. Do you think your bank gives you free credit score monitoring out of kindness? Yeah, not a chance. Here's what's really happening. Every time you check your credit score through your bank's app, they're collecting data on you. And they're not just keeping it, they're selling it. Banks use this information to predict your spending habits, track your financial decisions, and, worst of all, adjust how much they can squeeze out of you. Ever noticed how some people get better loan rates than others, even with similar credit scores? That's because banks use your behavioral data to decide who gets fair interest rates and who gets screwed over. They know if you're likely to carry a balance, make late payments, or rely on credit to survive. And guess what? If they see that pattern, they'll offer you loans and credit cards with even higher interest, because they know you'll take them. How to beat this? Stop checking your score through your bank. Instead, use independent tools like Credit Karma or Experian. These won't sell your financial habits to the very institutions profiting off of you. Because in the end, your credit score isn't just a number. It's a product. And you are the one being sold. This next one is the high-interest savings account illusion. Ever heard a bank say, open a high-yield savings account and watch your money grow? Sounds great, right? Except it's a lie. Banks love to advertise their high-interest savings accounts. But here's the reality. Most of them offer less than 1% interest. Meanwhile, inflation is eating away 5 to 7% of your money's value every single year. Let's do the math. Say you have $10,000 in a high-yield savings account, earning 0.5% interest. That means at the end of the year, you've earned a whopping $50. Meanwhile, inflation has made everything around you 7% more expensive. In real value, your money is actually worth less than when you started. And here's the kicker. Banks know this, but they still push these accounts because they make you feel safe, while they take your deposits and invest them for way higher returns. How to beat this? Don't park all your savings in a traditional bank account. Instead, consider high-yield online savings accounts, treasury bonds, or even low-risk index funds. These options help your money at least keep up with inflation instead of silently losing value over time. Because what's the point of saving if your money is secretly shrinking? The fourth trick is called fee stacking. It's how banks quietly drain your money. Have you ever checked your bank statement and thought, wait, where did all my money go? Well, let me tell you where. It's vanishing into fees. Banks have mastered something called fee stacking, a sneaky way of charging you for things you didn't even realize you agreed to. Overdraft fees, maintenance fees, transfer fees, even fees just for talking to a live agent. And here's the real kicker. These small fees add up to billions in profit for banks every single year. Ever been charged a $35 overdraft fee for going just a few dollars over your balance? That's not an accident. It's strategic. Banks design their systems so that transactions process in a way that maximizes overdraft penalties. Some even rearrange transactions so the largest one goes through first, making sure your account is empty before the smaller ones hit, racking up multiple fees instead of just one. How to beat this? Call your bank and demand a fee waiver. You'd be shocked how often they'll remove fees just to keep you as a customer. And if your bank refuses, find one that doesn't charge hidden fees in the first place, because the only thing worse than being nickel and dimed is letting them get away with it. This next one is where most people fall for. The fifth one is called the loan interest trick. Ever seen a loan offer and thought, wow, the monthly payment is lower than I expected? Well, that's exactly what the bank wants you to focus on. The monthly payment. Because if they showed you the real cost of that loan, you'd probably run the other way. Let's break it down. Imagine you take out a $30,000 car loan at 6% interest for 5 years. The bank tells you, good news, your monthly payment is just $600 per month. Sounds reasonable, right? Except, by the time you finish paying off that car, you won't have paid $30,000. You'll have paid over $40,000. That's $10,000 extra, just in interest. And here's the trick. Banks never highlight the total repayment amount up front. They only show you the affordable monthly payment because they know it tricks your brain into thinking the loan is cheaper than it actually is. How to beat this? Before signing any loan, run the numbers. Use a loan calculator and look at the total interest paid, not just the monthly bill. Sometimes it's better to save for some time and give an upfront payment, because when you know the true cost of borrowing, you stop making banks richer and start keeping more money in your own pocket. Now, this one is where a lot of people get tricked into spending more. It's called the credit card reward bait. Imagine a pop-up notification on your phone saying, "Congratulations, you just earned $5 cash back on your purchase." Feels good, right? That little dopamine hit from credit card rewards makes spending feel like a win. But here's the problem. You're not winning. The bank is. Banks love offering cashback rewards and points because they know it makes you spend more. In fact, studies show that people using rewards credit cards spend 12 to 18% more than they normally would. And guess what? That extra spending is exactly how banks get you into credit card debt. Because here's the brutal math. You earn 2% cash back. But if you don't pay your balance in full, you're paying 20% or more in interest. That's like picking up pennies while burning $100 bills. And here's where it gets even worse. People end up buying things they don't even need just to hit the points goal for a reward. How to beat this? If you're using a rewards credit card, only use it for purchases you were already going to make. And most importantly, never carry a balance. Pay it off in full every month. Because if you're paying interest, that free cashback just turned into one of the most expensive purchases you've ever made. Finally, the last trick, which is one of the most used psychological tricks worldwide, is the limited time offer loan scam. Have you ever heard or seen something like, "Hurry, this special low-interest loan offer expires in 48 hours." Sounds urgent, right? Like you need to act fast, or you'll miss out on a once-in-a-lifetime deal. Except, it's a lie. Banks manufacture fake urgency to pressure you into signing bad financial deals before you've had time to think. They know that when people feel rushed, they make emotional decisions instead of logical ones. And here's the reality. These limited time offers aren't limited at all. They come back over and over again, because they were never exclusive in the first place. Why do banks do this? Because they don't want you to compare options. They don't want you to shop around for better rates. They want you to panic, sign now, and lock yourself into years of high-interest payments. How to defend yourself against this? Simple. Never rush a financial decision because of limited time pressure. If a deal is truly good, it'll still be there after you take time to research. And if the bank tells you it won't, that's your sign to walk away. Because the only thing worse than missing out on a special offer is locking yourself into a bad deal for years. If you've fallen for any of these tricks, you're not alone. Banks have spent decades perfecting these tactics to keep people financially weak, stuck in debt, and constantly chasing special offers that only benefit them. But now, you know the game. And once you see these traps for what they are, you stop playing into their hands. And if this video helped you, you need to watch this next one. Because the more you learn, the harder it gets for them to take advantage of you. And hey, if this opened your eyes, consider hitting like and subscribe. It's not just about growing this channel. It's about making sure more people see this, so they don't fall for these same traps. Because in a world designed to take your money, knowledge is your best defense.